September 15th, 2025. 9:47 a.m. Austin, Texas. I was making breakfast when my phone exploded with notifications. Not the usual morning buzz of emails and news alerts. This was different. This was chaos. Twitter, Reddit, financial news apps, even my mom texting me in all caps. Elon bought $1 billion in Tesla stock. My hands started shaking so badly, I nearly dropped the spatula. I abandoned the eggs burning on the stove and grabbed my phone with both hands, scrolling frantically through the headlines. Bloomberg. Musk makes unprecedented $1 billion personal investment in Tesla. CNBC. Tesla CEO doubles down with billion-dollar share purchase. Wall Street Journal. Elon Musk's bold bet. $1 billion Tesla stock buy signals confidence. I pulled up my Robinhood account. My hands were still shaking as I entered my password wrong twice before getting it right. When the portfolio screen finally loaded, I just stared at the number, unable to process what I was seeing. My Tesla position. 2,847 shares bought at an average cost of $385 per share. Total investment. $1,096,095. Current value as of market open. $1,237,155. I was up $141,060 in one morning because Elon Musk had decided to buy $1 billion worth of his own company's stock. But here's what you need to understand. What nobody reading those headlines that morning understood. This wasn't a win for me. This was a temporary reprieve from total financial destruction. Because 3 months earlier, I'd been sitting in this same kitchen, looking at this same portfolio, watching my entire life savings evaporate in real time. Let me back up. My name is Marcus Sullivan. I'm 34 years old. I was a software engineer at a mid-sized tech company in Austin until March 2025, making $185,000 a year with stock options and benefits. I had a modest house in the suburbs, a reasonable car payment, and about $120,000 in savings. Had. Past tense. By September 15th, 2025, the day Elon Musk bought his billion-dollar stake, I was unemployed, nearly bankrupt, and betting literally everything I had left on Tesla stock. That $1.09 million investment? That wasn't extra money or play money or some diversified portfolio allocation. That was everything. My entire 401k cashed out with penalties. My entire savings. Money I'd borrowed from my brother. Money I'd gotten from a home equity line of credit. Money I absolutely, positively could not afford to lose. And I'd put every single dollar into Tesla stock at the worst possible time. December 16th, 2024. Tesla was trading at $479.86 per share. The company was riding high. Cybertruck deliveries were ramping up. Full self-driving seemed finally ready for prime time. Elon was doing victory laps on Twitter about record production numbers. I'd been following Tesla since 2019, watching the stock split and soar, always thinking I should buy some, but never pulling the trigger. Too risky, I told myself. Too volatile. Elon's too unpredictable. But in December 2024, something changed. I'd spent 6 months researching the electric vehicle market, studying Tesla's competitive advantages, analyzing their profit margins and growth trajectory. I convinced myself that Tesla wasn't just a car company. It was an energy company, a software company, an AI company. I convinced myself that $479 per share was actually cheap, considering the long-term potential. I convinced myself that I was being smart and strategic and rational. So on December 16th, 2024, I bought 500 shares of Tesla at $479.86. That was $239,930, almost all of my liquid savings. My wife Jennifer thought I was insane. "That's too much in one stock," she said, her voice tight with anxiety. What if something happens? What if Elon does something crazy? What if the market crashes? It's a calculated risk, I told her, full of confidence I didn't actually feel. Tesla is going to dominate the next decade. This is our chance to build real wealth. Trust me. Trust me. Those words would haunt me for months. For about 6 weeks, my bet looked brilliant. Tesla climbed to $495, then $508. I was up nearly $15,000. Jennifer stopped questioning my decision. I started thinking about buying more. Then, March happened. March 2025 was when everything fell apart. Multiple things went wrong simultaneously, creating a perfect storm that destroyed Tesla's stock price and, eventually, my entire financial life. First, there was a major recall. Tesla had to recall 1.8 million vehicles due to a software issue that could cause sudden unintended acceleration. The company insisted it was a minor problem fixed with an over-the-air update, but the media coverage was brutal. "Death trap on wheels," read one headline. "Tesla's deadly software bug," read another. Second, there was increased competition. Chinese EV manufacturers were flooding the U.S. market with cheaper alternatives. BYD, NIO, XPeng. They were offering vehicles with comparable range and features at 60% of Tesla's price point. Third, and most devastating, there was Elon himself. In early March 2025, Elon got into a Twitter war with several Democratic senators over proposed EV subsidies. He called one senator a corrupt corporate puppet. He told another to go back to Economics 101. He posted memes mocking their policy proposals. The senators responded by proposing legislation that would exclude Tesla from future federal EV tax credits. They argued that Tesla was already profitable and didn't need government subsidies, and that Elon's behavior showed contempt for the democratic process. The market panicked. Institutional investors started dumping Tesla stock. The stock price, which had been hovering around $490, started falling. $470, $450, $420. I told myself it was temporary. I told myself it was just market noise. I told myself that smart investors buy the dip. So, on March 5, 2025, when Tesla hit $390, I bought 300 more shares. That was another $117,000. Money I borrowed from my brother Tom with a promise to pay him back within 6 months. The stock kept falling. $350, $320, $280. By March 10, 2025, Tesla was trading at $222.15 per share. My 800 shares, which I'd bought for an average cost of $387.41, were now worth $177,720. I was down $132,208 in less than 3 months. That number, $132,208, represented 3 years of savings. It represented security for my family. It represented the down payment on a bigger house we'd been planning. It represented college funds for the kids we wanted to have someday. Gone. Evaporated. Disappeared into the abstract nowhere of market losses. Jennifer was beyond angry. She was scared, devastated, furious at me for gambling with our future. "You promised this was a smart investment," she said, her voice shaking. "You said you'd researched it. You said you knew what you were doing. And now we've lost over $100,000 because you believed in Elon Musk?" "It's not a loss until you sell," I said weakly, repeating the mantra every losing investor tells themselves. "The stock will recover." Tesla is still fundamentally strong. The company makes money. They have industry-leading technology. This is just temporary market irrationality. "Or maybe," Jennifer said coldly, "you made a terrible decision because you got caught up in hype and convinced yourself you were smarter than the market." She moved out 2 weeks later. Said she needed space to think about our marriage. Said she couldn't watch me destroy our financial future in real time. Said she'd married an intelligent, responsible man, not a gambling addict who'd bet everything on a billionaire's ego. I wanted to argue with her. I wanted to prove she was wrong. But sitting alone in our house, watching Tesla's stock price continue to slide, I couldn't. Then I made the worst decision of my life. The decision that would ultimately lead to my complete financial ruin. In late March 2025, my company announced layoffs. Tech sector slowdown, reduced consumer spending, need to optimize operations, the usual corporate euphemisms for, "we're cutting 20% of the workforce." I was in that 20%. 15 years of solid performance, positive reviews, successful projects, none of it mattered. Last hired, first fired, and I'd only been with the company for 3 years. My severance package was decent, 3 months of salary, continuation of benefits for 6 months, and my vested stock options. Altogether, it was about $78,000 after taxes. A rational person would have used that money to pay bills, find a new job, and rebuild their emergency fund. A rational person would have cut their losses on Tesla and moved on. I was not rational. I was obsessed. I'd spent 4 months watching Tesla fall from $479 to $222. I'd spent 4 months reading every analyst report, every blog post, every Reddit thread about Tesla's valuation. And I'd convinced myself of something that felt like truth but was actually delusion. Tesla at $222 per share was the buying opportunity of a lifetime. I told myself that Elon's Twitter wars would blow over. I told myself that the recall was overblown media hysteria. I told myself that Chinese competition was exaggerated. I told myself that smart money was accumulating shares, while retail investors panicked. I told myself a lot of things that made me feel better about what I was about to do. On April 2nd, 2025, I cashed out my 401k. With penalties and taxes, my $180,000 retirement account became about $126,000. I took my $78,000 in severance. I took out a $45,000 home equity line of credit on my house. And I bought 1,447 more Tesla shares at an average price of $235 per share. My total position was now 2,847 shares at an average cost of $385 per share. I'd invested $1,096,095, literally every dollar I had or could borrow, into a single stock that had lost more than half its value in 4 months. My brother Tom called me when he found out. "Marcus, what the hell are you doing? You're unemployed. You're separated from your wife. You just put your entire life savings into a falling stock. This is insanity." "It's genius," I said, believing it. "Tesla at $235 is absurdly undervalued. When it recovers to $400, I'll have made back all my losses plus profits. When it gets back to $500, I'll be wealthy. This is how you build generational wealth. You buy low when everyone else is panicking." "Or," Tom said quietly, "this is how you lose everything." For 5 months, Tom was right. Tesla didn't recover. It bounced around between $220 and $260, going nowhere while I watched my portfolio value fluctuate between about $630,000 and $740,000. I was down between $350,000 and $460,000 depending on the day. I couldn't sleep. I'd wake up at 3 a.m. and check the pre-market trading. I'd watch every tick of the stock price during market hours. I'd spend hours analyzing technical charts, reading analyst upgrades and downgrades, trying to divine some signal that would tell me I was right to hold. I stopped applying for jobs. I stopped answering calls from friends. I stopped doing anything except obsessing over Tesla's stock price and trying to will it back to profitability through sheer force of desperate belief. Jennifer filed for divorce in July 2025. The paperwork cited irreconcilable differences, but we both knew what it really meant. I'd destroyed our marriage by gambling with money we couldn't afford to lose. By September 2025, I was behind on my mortgage. I'd burned through my unemployment benefits. I had about $8,000 left in checking account and no income. The home equity line of credit I'd used to buy Tesla stock was going to have its first payment due in October, $680 per month that I couldn't pay. I was staring at total financial collapse, bankruptcy, foreclosure, complete ruin. And then, on September 15th, 2025, Elon Musk bought $1 billion worth of Tesla stock. The news broke at 9:47 a.m. By 9:50 a.m., Tesla's stock price had jumped from $355 to $389. By market open at 9:30 a.m. Eastern, it hit $435. My portfolio value went from $1,011,185 to $1,237,155 in about 2 hours. I was still down $158,940 from my total investment, but for the first time in 6 months, I could see a path back to breaking even. If Tesla hit $465, I'd have my money back. If it hit $500, I'd actually be profitable. I sat in my kitchen, watching the green numbers on my phone screen, and felt something I hadn't felt in months: hope. Elon had saved me. The man I'd bet everything on had finally delivered. He'd put his own money where his mouth was. He'd shown the market that Tesla was undervalued. He'd proven that I was right to hold. I pulled up Twitter and saw Elon's post explaining the purchase. Tesla stock is undervalued. I'm buying $1 billion worth because I believe in this company's future. Sometimes you have to show, not tell. The replies were euphoric. Tesla bulls were celebrating. Short sellers were panicking. Financial media was scrambling to analyze what this meant. I typed out my own reply. Thank you for believing. Some of us never stopped holding. I felt vindicated, justified, proven right. All the people who'd called me crazy, Jennifer, Tom, my former colleagues, they'd been wrong. I'd been right to trust Elon. I'd been right to hold through the pain. What I didn't know, what I couldn't have known in that moment of euphoria, was that Elon Musk's billion-dollar purchase wasn't a vote of confidence in Tesla's future. It was the beginning of the end. September 28, 2025, 11:23 p.m., Austin, Texas. The previous section ended with me feeling saved by Elon's billion-dollar purchase. For 13 days, I lived in that delusion. 13 days of watching Tesla's stock price hover between $420 and $445. 13 days of calculating how much money I'd make when it hit $500. 13 days of planning my comeback. Then, on September 28th at 11:23 p.m., everything changed. I was lying in bed, scrolling through Twitter before sleep, when I saw the Bloomberg notification. My stomach dropped before I even read the full headline. SEC launches investigation into Elon Musk's Tesla share purchase. Market manipulation suspected. My hands went numb. I sat up in bed, reading the article 3 times, trying to process what it meant. According to Bloomberg sources, the Securities and Exchange Commission had opened an investigation into the timing and motivation behind Elon Musk's September 15th stock purchase. The SEC was questioning whether Musk had material non-public information when he bought the shares, and whether the purchase was designed to artificially inflate Tesla's stock price to avoid margin calls on his personal loans. Material non-public information. Margin calls. Artificial inflation. I clicked through to CNBC, Wall Street Journal, Reuters. They all had versions of the same story, citing unnamed sources familiar with the investigation. The details that emerged painted a very different picture than the confident vote of confidence Elon had sold us. According to these reports, Elon Musk had borrowed heavily against his Tesla shares over the past 2 years. He'd taken out loans using Tesla stock as collateral to fund his various ventures, SpaceX expansions, Twitter operations, other projects. Those loans had margin call triggers tied to Tesla's stock price. When Tesla fell below $250 in March 2025, Elon was reportedly getting close to those margin call levels. If the stock fell much further, his lenders could have forced him to sell massive amounts of Tesla stock to cover the loans, which would have triggered a death spiral. Selling drives the price down, which triggers more selling, which drives the price down further. So, on September 15th, according to these unnamed sources, Elon hadn't bought $1 billion in Tesla stock because he believed in the company's future. He'd bought it because he was desperate to push the price above his margin call levels to avoid being forced into catastrophic liquidation. The stock purchase wasn't confidence, it was survival. And now the SEC wanted to know if that constituted market manipulation. I sat in my bed at 11:37 p.m., reading article after article, feeling the ground disappear beneath me. The foundation of my entire thesis, that Elon's purchase proved Tesla was undervalued, had just been revealed as potentially fraudulent. The pre-market opened at 4 a.m. Eastern. I was awake, watching. Tesla opened down 6.8% at $406. By 9:30 a.m. market open, it had fallen to $387. By noon, it was at $361. I watched $210,855 evaporate in 6 hours. My portfolio value, $1,027,767. My total investment, $1,096,095. I was down $68,328 and falling fast. But here's the thing about being trapped in a losing position. You can't think rationally anymore. You can only think about getting back to break even. You can only focus on that number you need to hit to make everything okay again. I needed Tesla to get back to $385 per share to break even. Just $385. It had been at $435 13 days ago. It could get back there. It would get back there. I just needed to hold. Over the next 3 days, more information leaked about the SEC investigation. Tesla's board had apparently been unaware of the extent of Elon's margin loan exposure. Several major institutional investors were demanding answers. Short sellers were piling on, betting that Tesla would fall further. The stock hit $320 on October 1st. My portfolio value, $911,040. Down $185,055. I got an email from my mortgage company. I was 60 days past due on my payment. If I didn't bring the account current within 30 days, they would begin foreclosure proceedings. I got a call from my brother Tom. The loan I'd promised to repay in 6 months was now 6 months overdue. He needed the money. His daughter was starting college. He'd been patient, but he couldn't wait anymore. I got a letter from the bank that had issued my home equity line of credit. I'd missed 2 payments. They were demanding immediate payment of $1,360 plus late fees, or they'd accelerate the entire loan amount and pursue collection. I had $3,200 in my checking account. I had no income. I had a Tesla stock portfolio worth $911,040 that I'd paid $1,096,095 for. And I had financial obligations I couldn't meet piling up like a tsunami. The rational move was obvious. Sell the Tesla shares, take the loss, use the money to save my house, and pay back my brother. Accept defeat, file bankruptcy if necessary, and start rebuilding. But I couldn't do it. I'd lost so much already. I'd sacrificed my marriage, my job, my savings, my future. I couldn't accept that it was all for nothing. I couldn't admit that I'd destroyed my life by believing in Elon Musk. So instead of selling, I doubled down. On October 3, 2025, I took out a personal loan from a predatory lender at 23% interest. They gave me $25,000 based on my home equity, even though I was unemployed. The loan officer didn't ask many questions. They knew exactly what kind of desperate person takes a 23% loan with no income. I used $15,000 to bring my mortgage current and make partial payments on my other obligations. I used the remaining $10,000 to buy more Tesla stock. At $315 per share, I bought 31 more shares. My total position was now 2,878 shares at an average cost of $384.14. Tesla closed that day at $308. I'd bought at $315 and watched it fall $7 in 6 hours. My portfolio value, $886,424, down $210,871. Tom stopped answering my calls after I told him I didn't have his money yet. Jennifer's lawyer sent paperwork about divorce asset division. She wanted half of what was left in any joint accounts, which was basically nothing since I'd gambled it all away. I stopped eating regular meals to save money. I stopped paying my utilities to preserve cash. I sat in my house in the dark because I couldn't afford the electricity bill, watching Tesla's stock price on my phone, willing it to go back up. The SEC investigation continued. More details leaked. Elon had reportedly borrowed over $20 billion against his Tesla shares. His margin call threshold was rumored to be around $240 per share. At current prices around $310, he was safe, but barely. Financial analysts started publishing reports about Tesla's Musk overhang, the risk that Elon's personal financial situation posed to the company's stock price. If he was forced to sell shares to cover loans, it could trigger a massive sell-off. The stock kept falling. $295, $280, $265. By October 10, 2025, Tesla was trading at $258 per share. My portfolio value, $742,524, down $353,571. I'd lost nearly a third of my total investment. I was going to lose my house. The foreclosure process had begun. I had 45 days until the sheriff's sale. I couldn't pay my brother back. I couldn't pay my predatory loan. I couldn't pay for food without using credit cards I was already maxing out. And still, I didn't sell. Because selling meant admitting I was wrong. Selling meant accepting that I'd destroyed my life for nothing. Selling meant acknowledging that Elon Musk had manipulated me and thousands of other retail investors into believing his billion-dollar purchase was confidence when it was really desperation. I couldn't face that truth. So I kept holding, kept believing, kept hoping that somehow this would all turn around. Then came October 14, 2025. The day everything ended. The SEC announced formal charges against Elon Musk for securities fraud. They alleged that he'd made the billion-dollar Tesla purchase with full knowledge of his margin call situation and that he'd publicly misrepresented his motivations to inflate the stock price. The charges included civil penalties and could potentially bar him from serving as CEO of a public company. Tesla's stock opened at $258 and immediately went into freefall. Circuit breakers triggered twice. Automatic trading halts when a stock falls too fast. By market close, Tesla was at $187 per share. My portfolio value, $538,226, down $557,869 from my total investment. I'd lost more than half my money. I sat on my kitchen floor and finally let myself feel the full weight of what I'd done. I'd gambled everything on a billionaire's ego. I'd believed that someone worth hundreds of billions of dollars cared about retail investors like me. I'd convinced myself that Elon Musk's interests were aligned with mine. But Elon didn't care about me. He didn't care about any of us who'd bought Tesla stock, believing his rhetoric about the company's mission and future. He cared about protecting his own wealth, his own empire, his own position. And he'd used me, as exit liquidity for his desperate attempt to avoid margin calls. The next morning, I made the only decision I had left. I sold all 2,878 shares of Tesla stock at $179 per share. After commissions and fees, I netted $514,978. Total loss, $581,117. I used the money to pay back my brother's $117,000 loan. I used it to pay off the predatory personal loan I'd taken. I used it to pay my delinquent mortgage payments. I used it to pay credit card debt I'd accumulated trying to survive while unemployed. When I was done paying off everyone I owed, I had $47,300 left. That was it. That was all that remained of $1,096,095 in investments, a 95.7% loss. But it got worse. Because I'd cashed out my 401k to buy Tesla stock, I owed taxes on that withdrawal. The IRS sent me a bill for $62,000 in taxes and penalties on my retirement account withdrawal. I had $47,300 in cash and owed $62,000 in taxes. I was $14,700 in debt to the federal government with no assets and no income. I filed for Chapter 7 bankruptcy on October 28, 2025. The lawyer charged me $2,000, which I paid with my last credit card. I listed $47,300 in cash assets, $147,000 in remaining debts, IRS, credit cards, my divorce attorney fees, and $12,000 in annual income from unemployment benefits that were about to run out. The bankruptcy trustee was sympathetic but clear. I'd made catastrophically bad financial decisions. I'd overinvested in a single speculative asset. I'd borrowed money I couldn't repay. I'd prioritized stock gambling over basic financial obligations. "You're not the first person to lose everything on Tesla," he told me during our meeting. "But you might be one of the most extreme cases I've seen. How did you let it get this bad?" I didn't have a good answer. How do you explain that you got swept up in a cult of personality? How do you explain that you believed a billionaire's Twitter posts were gospel? How do you explain that you confused conviction with delusion? My house went into foreclosure on November 12, 2025. The sheriff's sale was scheduled for December 3rd. I had 3 weeks to find somewhere else to live. I moved into my car on November 20th, 2025. A 2019 Honda Civic that I'd bought used 3 years earlier, back when I had a job and a future. I parked in different locations around Austin, trying not to draw attention. I showered at a gym that offered $10 monthly memberships. I ate at food banks. I was 34 years old with a computer science degree, 15 years of professional experience, and I was homeless because I'd bet everything on Elon Musk. Jennifer's divorce was finalized on November 30th, 2025. She got to keep her retirement account and her car. I got my debt and my Honda Civic. The judge was harsh in his assessment of my financial choices, noting that I'd recklessly gambled with marital assets against explicit spousal objections. The bankruptcy was finalized on December 15, 2025. Most of my debts were discharged. I still owed the IRS $62,000, but they agreed to a payment plan of $400 per month once I got employed again. If I got employed again. On December 20th, 2025. I was sitting in my car in a Walmart parking lot, using their free Wi-Fi to scroll through Indeed for job postings I was probably unqualified for, when I saw the news. Tesla's stock had recovered to $287 per share. If I'd held my 2,878 shares, they'd be worth $825,986. Still a massive loss from my investment, but not catastrophic. Not homeless living in my car catastrophic. But I'd sold at $179 per share in panic after Elon's SEC charges. I'd locked in maximum losses right before the recovery began. I wanted to laugh. I wanted to cry. I wanted to scream. Instead, I just sat there in my Honda Civic in a Walmart parking lot, looking at what I'd lost, and finally understanding the full scope of my failure. I'd trusted Elon Musk. I'd believed he was a visionary who cared about shareholders and retail investors. I'd convinced myself that his billion-dollar purchase was a signal to hold, to believe, to trust. But Elon wasn't a visionary looking out for little guys like me. He was a billionaire protecting his empire. And when he made that billion-dollar purchase to avoid his own margin calls, he'd known exactly what would happen. Retail investors would see it as confidence and hold their positions or buy more, providing the liquidity and price support he needed to protect his wealth. We weren't investors to him. We were tools. Exit liquidity. Bag holders who'd take losses so he could avoid them. And I'd played my role perfectly. As I write this, it's January 2026. I'm still living in my car. I've had 3 job interviews, all rejections. Companies Google your name before hiring, and my bankruptcy filing is public record. Poor financial decision-making, one recruiter told me. Liability risk, said another. Tesla's stock is trading at $340 per share. Elon Musk settled with the SEC by paying a $200 million fine, pocket change for a man worth over $200 billion. He's still CEO of Tesla. He's still posting on Twitter like nothing happened. He's still convincing retail investors that he's on their side. And somewhere out there, someone else is probably making the same mistake I made. They're probably reading Elon's tweets and thinking, he believes in the company, so I should too. They're probably calculating how much money they could make if they just held through the volatility. They're probably convinced they're being smart and strategic. They're probably about to lose everything, just like I did. My total financial damage. Investment loss, $581,117. Destroyed marriage, priceless. Lost career, incalculable. Current net worth, negative $12,000. IRS debt, after bankruptcy. Current home, 2019. Honda Civic, current job. Unemployed. Current prospects, none. The day Elon Musk bought $1 billion in Tesla stock, I thought he'd saved me. I thought he'd proven my thesis correct. I thought my patience and conviction would be rewarded. I was wrong about all of it. Elon Musk didn't save my portfolio. He destroyed my life. And the worst part is, he'll never know my name. He'll never see this story. He'll never face any personal consequences for the manipulation that cost me and thousands of others everything. Because that's how the system works. Billionaires make desperate moves to protect their wealth, and retail investors pay the price. They break the rules, pay trivial fines, and keep playing the game. We follow their lead, lose everything, and get labeled as gamblers who should have known better. Maybe I should have known better. Maybe I was naive and reckless and delusional. Maybe I deserved to lose everything for being stupid enough to trust a billionaire's motivations. But sitting here in my car, looking at what my life has become, I can't help but think, this system is designed to destroy people like me. It's designed to make us believe we can win by following billionaires' lead. It's designed to extract our wealth and leave us with nothing. And the people who designed it will never be held accountable. Tesla's stock closed today at $344 per share. If I'd held my position, I'd have $990,032 right now. Not a profit, but close to breaking even. Close enough to have saved my house, my marriage, my future. Instead, I have a car, a storage unit with whatever belongings I couldn't sell, and a bankruptcy filing that will follow me for 7 years. The American dream promised that if you worked hard and made smart investments, you'd build wealth. But they forgot to mention the fine print. Unless you're rich enough to manipulate the market, you're not building wealth. You're providing liquidity for people who already have it. I learned that lesson the hard way. It cost me everything. And somewhere, Elon Musk is still tweeting about how he believes in Tesla's future, completely indifferent to the lives destroyed by his billion-dollar desperation play. That's the real story. Not about my failure, though I failed spectacularly, but about a system where the rules protect the wealthy and destroy everyone else. I was a true believer. I drank the Kool-Aid. I trusted the vision. And now I'm homeless, bankrupt, and unemployed at 34 years old because I believed in Elon Musk. Don't make my mistake.